And so our operating costs, in Texas are generally low, but in this area, they're about less than $5 a barrel. So when we look at $40 a barrel, 40 barrels a day at $60 a barrel, the royalty, we're going to make about between $55 and $60,000 a month in revenue at $60 a barrel. So I mean, it's a substantial increase in revenue.
Hello, you're watching Proactive. I'm joined by Buccaneer Energy CEO Paul Welsh. Paul, very good to speak with you. Could you maybe start off just with a refresher on your operations in Texas and your overall growth strategy?
Okay, so thanks for having me this morning. So, as we've discussed in the past, Buccaneer is focused on onshore Texas. We have assets in, East Texas, West Texas, and South Texas. Our primary focus since I came on board as CEO has been in East Texas, the Pine Mills field. And in part of that field, the Pines really have an area called the Fouke area. And the Fouke area was discovered in 2021 after they had reinterpreted a 3D seismic program that was shot in 2018. So in that part of the field, and again, the field Pine Mills was discovered in 1947 or 1949, so it's been around for quite a while. But in 2021, they drilled a well called the Fouke 1, which encountered the reservoir section at essentially original reservoir conditions. So, 75 plus years after the original discovery, they found a part of the field that hadn't been tapped. And so they drilled the Fouke 1 and the Fouke 2, and both those wells came in at the field allowable rate, which is the maximum rate that the Railroad Commission, which is the overall authority here, will let you produce at 124 barrels a day. Actually, they produced at 140 for a while, then we stepped it back down to 124, which is the maximum. And so it's in that part of the field that we've been focusing on development activity. And we announced today that we just picked up a rig to drill the next well in that area, which is going to be called. Originally, we had it as the Fouke 3, but now it's going to be called Alar number 1, based on the lease that we picked up. So today's message is we've got the rig. We're going to start location construction here in the next couple of days with the idea to spud this well at the end of October, early part of November.
What makes this location particularly promising, Paul?
So what makes it interesting is that we think we have another location to the north of the Fouke 1 that will always also be at original reservoir conditions. And so what that means is that we're going to drill a well that'll come in at 124 barrels a day. Okay, we have a third of that well. So our net will be 40 barrels a day. And again, we're producing at the moment about 150 to 160 barrels a day in total at the company. So that'll add, that'll take us up over 200 barrels a day. So it's a substantial, increase in production. Secondly, this is a part of the field that produces very little water. And so our operating costs, in Texas are generally low, but in this area, they're about less than $5 a barrel. So when we look at $40 a barrel, 40 barrels a day at $60 a barrel, the royalty, we're going to make about between $55 and $60,000 a month in revenue at $60 a barrel. So I mean, it's a substantial increase in revenue. The internal rate of return on this is over 300%. Okay, our payout is less than 6 months, and as we've said in the past, we're always trying to close this gap between our NPV 10 and our market cap, and so this will add another 1.75 to $2 million of NPV 10 to that story. So again, that gap closes. And I think most importantly, given success here, we then have the opportunity to drill another well to the north, which we normally called the Fouke 4, which will further open up another 300,000 barrels of reserve. So there's a lot of interesting things that can happen given success here. And then as we've also discussed in the past, this is an area that is producing associated gas, whereas the majority of the field doesn't do that. And so given that associated gas and it's been increasing, we expect that we will also be able to monetize that. And our monetization strategy in this part of the world is to put in a Bitcoin mining facility. So we will use that gas that would be flared or otherwise burned and not add any value to generate additional revenue stream here. So there's a lot of interesting things that can happen with this well, given success.
So what's the upcoming milestones then that your investors should be looking out for, Paul?
So I think in the short term, we're going to get so we've got the rig essentially under contract, or great, build the location over the next couple of weeks, spud the well. The well will take about 2 weeks to, drill and evaluate. and then complete, and we'll put it on production in November. So, I mean, again, if this well works out, we'll add another 40 barrels a day net to our revenue stream in November. And then after that, we will then look at the results of the well, determine if we have enough gas volume here with the existing three wells to start the Bitcoin mining facility, and so that process will get underway. Again, given success there, then we view that the Bitcoin mining operation to start up in the first quarter of 2026. So there's a lot of activity, a lot of things hinge on this well, and we've been trying to get this well drilled for quite a while now. So we're excited to finally get here. It's taken a while. We have a great partner who's been, has 2/3 of this well, so they finally came around. So we think we're in really good shape, and we're looking forward to seeing the results of this.
Well, it sounds like a busy time for the company. Thanks for keeping us abreast of your developments.
All right. Thank you very much, and we look forward to coming back and telling you how successful this well was.
Look forward to that too. Paul Welsh, the CEO of Buccaneer Energy.